Hey everyone, and welcome back to another video for today. So over the last couple of days, we've had quite a lot of companies, popular stocks, popular names that reported their quarterly figures. A lot of them reported quite good quarters, and so the stock went up. Some of them reported quite good quarters, but the stock went down. So in today's video, I do want to touch on three companies, two stocks that went up, one stock that went down. The companies that we're going to touch on in this video is the first one, Zeta. Jumped after their quarterly figures. Then on Thursday, stock was down 7%, 8%, closed the day down 5%. Then I do want to touch on Duolingo and Eli Lilly. Yes, for all of you Novo Nordisk, or as one subscriber called it, Novo Nordip. Well, Novo Nordisk had its day in the sun. Stock was up. Vikings Therapeutics was up as well. Eli Lilly was down despite a double beat and guidance raised. So we'll discuss all of that in this video. If you're interested in more videos, of course, make sure you are subscribed, hit the notification bell so you don't miss any of the future videos, and especially not the future live streams. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also special thanks to fiscal.ai for sponsoring this video. So let's first start here with Zeta Global. So Zeta year to date now is only up 2.6%, but over the last couple of months, of course, this stock has performed quite well. It suddenly came on everyone's radar, actually right around, I think this time right here. It went up, then corrected itself, and then this week we've had quite a good reaction after the earnings report. Now, I made a video about Zeta right around here. If you missed that video, that will be in the top right corner. But right now, Zeta is a company worth around $5 billion or so. If you look at margins, growth 60.9%, I think that could be improved in the future. Free cash flow sits at 11.8%. Those are last 12 months figures. Remember the free cash flow number because we're going to have a look at their expectations for 2028. Revenue for the last 12 months was $1.1 billion, but those expectations are going up, as you can see right here. Compounded growth next 2 years for revenue, 20.5%, EPS growing 11.3%. Right now, forward PE sits at 21.3 times. Trailing PE is negative because, well, there basically was no E before. The average analyst price target still sits at $26. We're now at $19.24. I still think that this company could be acquired at $5 billion. You add a premium here, maybe $7, $8 billion or so. Still think it is a possibility. And if not, then there is definitely future growth potential for this stock. So why did the stock react positively when they reported earnings? So here we are on fiscal.ai. You can go read the whole transcript, read the whole report, all on this website. Go into the slides as well. And by the way, all of this is available right when the earnings report comes out. Every other metric that you will see is also out a couple of minutes after the reports get released. So the new update on the platform is truly amazing. Now, if we look here at revenue, $308 million, that was up 35% year over year, exceeding guidance by $11 million. Net cash from operations up 35% year over year. Free cash flow up 69% year over year. Very nice number. They repurchase shares as well, right? This is a company, since they are free cash flow positive, they probably view their stock as undervalued, and so they bought back more shares. They used $85 million of the $100 million authorization, and they've also approved a new $200 million program. And so they ended Q2 with zero net dilution versus Q1. The company also increased its full-year revenue, adjusted EBITDA, and free cash flow guidance, indicating strong visibility and confidence in its future performance. So Zeta Global is increasing its financial guidance for both Q3 and full year 25. For Q3 25, revenue guidance is increasing to a range of $327 to $329 million, representing approximately 22 to 23% year-over-year growth. Adjusted EBITDA here, again, representing 31 to 32% year-over-year growth. For the full year, they're now expecting revenue to come between $1.258 and $1.268 billion, representing 25.5% growth year-over-year at the midpoint. And adjusted EBITDA expected to grow 37.5% year over year at the midpoint. As for free cash flow, guidance is increased to the range of 140 to 144 million dollars, representing growth of around 52 to 56% year over year. So again, stellar quarter here by Zeta. I know some of you, actually a lot of you, did ask me to review this company. So here it is. Congratulations to the shareholders. I know some of you bought it at $12, $13, $14 or so. So congrats on the win for now. But I do still think that there is a long way to go. Looking at a couple of metrics here again, all powered by fiscal.ai. There's a link down in the description below. You'll get 15% off if you use the link. You can also try it out 2 weeks for free. You'll get Fiscal Pro. So why not? Looking at revenue for the year, right now the expectations are for revenue to only grow 9.2%. Then for fiscal 26, 17.5%, and then 19.4% in fiscal 27 to $1.77 billion. As for free cash flow, as you can see over the last couple of quarters, this has started to increase and accelerate quite rapidly. Looking at the scaled customers, 100K to a million here. Also, we've seen a nice acceleration in growth over the last couple of quarters, and last quarter that increased around 23-24% or so. Looking at the super scaled customers over a million here as well, you actually see an acceleration in growth quarter over quarter, now growing 16.7% year over year. And so all in all, looking at total scaled customers, that increased 20% year over year. And here as well, you can see the start of an acceleration in growth. Of course, the year over year comparison, especially next quarter, is going to be quite easy. Now, if we go back here on fiscal and ask the question, any changes to the 2028 target? This is guidance that they gave us previously, and we'll see it right here. They're reaffirming their long-term targets for 2028. So over $2.1 billion in annual revenue, at least 25% adjusted EBITDA margin, and over 16% free cash flow margin. As we've seen before, right now for the last 12 months, we're at 11.8%. So they're expecting to grow and for margins to expand as well. Very nice combination for those saying, yeah, but it already went up, right? It already went up a lot over the last month or so. It's up 29.4%. Well, I still think it is quite cheap. Even if it went up a lot, you just got a quarter, beats across the board, guidance was raised, 2028 targets still reaffirmed, so why not? Pretty simple. Moving on to company number 2, and that's Duolingo. Duolingo I actually covered when it went public. I've covered it a couple of times since in those monthly videos, but this one was in the video where I said 4 stocks to buy before they report earnings, because as you can see, the drawdown over the last year, not even over the last year, over the last couple of months was quite insane. What this thing was down 38%. Based on what? Based on AI is destroying the business? Well, you will see the numbers and you will tell me in the comment section if you think that AI destroys this business or AI actually makes this business stronger. Anyways, Duolingo was up 13.7%. At one point it was up, I think, over 25% or so during the day, which makes this even more appealing right now because you got the numbers, stock went up even higher, there was a pullback, and well, we're still down significantly from their all-time highs, right? We're still down 27%. Now, this is not a cheap stock whatsoever. This is a company worth around $15-16 billion or so. Margin-wise, very, very good. Okay, margin-wise, very, very good. Forward PE 102 times. Okay, but if you look at EPS, forward 2 years compounded growth expectations sits at 53.6%. Okay, so the bottom line is expected to grow quite rapidly, compounded over the next 2 years. If we look at revenue here, same time period, 30% growth. And yeah, this company is just killing it. So what has happened this quarter? Why was it so good? Well, they saw 41% revenue growth, 46% subscription revenue growth, and record profitability. They also launched a new chess course, which apparently has become the most popular thing for them. And that's the thing for Duolingo. It's not only a platform to learn new languages. It can and it will be a platform to learn a lot of new things in the future. Music, math, chess. They can add so much more in the future. Learning things should be fun, and they are gamifying the learning process. Of course, AI, right? Of course, you can converse with ChatGPT or with Gemini, right? You can say, oh, can you translate this and that? Okay, we all know that exists. That existed with Google Translate for a long, long time. But people go on Duolingo to learn new stuff, not to need to pick up the phone and ask to translate something, or to pick up the phone and ask, oh, should I move my bishop or should I move my rook? No, you go on there to learn. That's the big difference, and that's the problem with the market. The market still doesn't understand why people use Duolingo, which is, I know, it's quite strange. And with the help of AI, chess, for example, that didn't exist a year ago. The code for the chess that they have on the platform didn't exist. It exists now. It went on very fast thanks to AI. So yeah. Anyways, free cash flow here expected to grow rapidly over the next coming years. If you look at monthly active users, that has grown tremendously over the last couple of years. But as you can see, we have seen now a quarter-over-quarter drop. Now, in their defense, Q1 was a very, very strong quarter. They had a very, very good campaign. And so you can see that Q1 was, well, a nice jump quarter over quarter. So this is the natural churn. Of course, if we see this continue, then yes, we can raise an orange or maybe a red flag. But the more important metrics are the following ones. First of all, we have here subscription revenue. That continues to go up and to the right. Then this is important because learning is a daily task. Learning a new language, learning a new skill, whether it's math or chess, is a daily thing. And here, as you can see, daily active users, that did grow quarter over quarter. That did grow close to 40% year over year. So that's the important part here. Total bookings increased 41% year over year. Paid subscribers, it's true that growth is decelerating, but that's still increasing 36.3% year over year. So with Duolingo, I do think that if you wanted to open a position, you didn't do it before the earnings, you think that now, oh, it's up 13%, I missed my chance. I don't think you did. You could have done what I think Joseph Carson did, open a position in Duolingo before the earnings, so half before and then half after the earnings, which is what I keep saying in each and every video or during the live streams as well. If you really, really want to own a position, open before. Doesn't need to be the full position. But after the earnings, you got more information. If the stock goes up, your initial position is up already. And if the stock goes down and you like what you heard, you can now buy more shares for the same amount. So win-win, I'd say. But yes, Duolingo, still a good pick here. Moving on to stock number 3, and that's Eli Lilly. We've been talking a lot about Novo Nordisk, but Eli Lilly's stock has also been taking a hit more recently. As you can see, we're now in the biggest drawdown over the last 5 years. Stock is down 27% since the highs back in June 2024. Year to date, we can see that the stock has, well, now underperformed by quite a lot. It's down 17% after the stock went down 14%, well, after they reported earnings. This company worth $670 billion, trailing PE 62.3 times, but forward one 30.4 times. Margin-wise, pretty good. Free cash flow margin is lower than Novo Nordisk though. But revenue is still expected to grow 26.6% forward 2 years. EPS 52.3%, also forward 2 years. So yes, PE right now might seem high, but that's still expected to grow quite rapidly. And of course, as the stock comes down, well, the forward multiple goes down as well, unless analysts do revise their figures on the downside, and EPS is expected to be less than before. But as I said at the start, double beat for the quarter and guidance was raised. So what exactly happened here? First of all, revenue increased by 38% year over year, driven by Zeta and Manjaro. Reported EPS increased by 92% year over year. Non-GAAP EPS increased by 61%. Gross margins increased to 84.3%, a 3.5 percentage points increase. Manjaro revenue increased by 68% to $5.2 billion, and Zeta revenue increased by 172% to $3.38 billion. They gave us some guidance here, and again, guidance has increased. We're now looking at $60 to $62 billion for the full year, and EPS has been raised to a range of $20.85 to $22.10. And this is basically what has happened with revenue over the last 3 years. Revenue has increased compounded by 23.6% over the last 3 years. Now, if we look at total revenue for the next couple of years, what's expected? In fiscal 25, market is expecting just over $60 billion in revenue. But in fiscal 27, we're already at $84.3 billion. And as I've covered with Novo Nordisk, you know that the obesity market, diabetes market is pretty big. So the opportunity is quite huge. Free cash flow wise, look at this. Last 12 months, $4.8 billion. For fiscal 25, that's expected to be $13.7 billion. But the growth here for fiscal 27, we're going to be at $23.2 billion in free cash flow. Now, what's interesting here is that Mounjaro, which is the red bars right here, surpassed Novo Nordisk Ozempic, 5.2 billion compared to 5 billion. Then looking at Zepbound, look at that growth rate, growing 172%, compounded, of course, since December quarter of 23, started very low. It's a pretty newish product, let's say, compounding at 619% since then. Now, what has happened? Why is the stock down? Well, trial results. The trial showed that patients taking the highest dose of this solution right here, orforglipron, okay, it's always the weirdest names, they experience an average weight loss of around 12% over 72 weeks. While this is a significant result and the drug met all its primary endpoints, it fell short of some Wall Street analysts' expectations, who had been hoping for results closer to 15%. So the company is basically losing $90 billion because the results came at 12% and the market was expecting 15%. Yeah, make it make sense. Then the other two things here. One, competition concerns. So the weight loss drug market is a major focus for pharmaceutical companies. The less than expected efficacy of Eli Lilly's oral drug, like I said, everybody's working towards an oral drug, which is also why Vikings Therapeutics today went up, when compared to a key rival's product, has raised concerns about competitive position. In contrast, shares of Novo Nordisk rose today. The trial also showed a relatively high patient discontinuation rate for that solution here, which has also been a point of concern for some physicians and investors. And so if we look at the stock right now, we're at $640, $644 after hours. We're back to prices not seen since January 2024, where you could say that it did find a sort of bottom. Well, could find a sort of bottom previously that was a bit of a resistance until we actually broke through that. On the weekly, we're not oversold just yet. On the daily, we are right now. But Eli Lilly, again here as well, it's of course the opposite of what we've seen with Zeta and Duolingo here. It was actually a good report, but stock went down. And so I do think that, yes, there is an opportunity with this name. And so all in all, that's about it for me in this video. Do let me know if you've seen other companies report earnings, stock moved on the upside, on the downside, you still think it's a good opportunity. Let me know down in the comment section below. Check out fiscal.ai to get 15% off. Link is also in the pinned comment. We'll see each other in the next one. Bye-bye.